Today, we need to talk about something big happening with Hedera. Because while the price looks weak and retail sentiment is low, there are major institutional moves happening behind the scenes that most people are ignoring. Millions of HBAR is being scooped up every single day. ETF inflows keep rising. Wrapped Bitcoin has just launched on-chain, and at the same time, the price has dropped all the way down to keys board. So if you're wondering why HBAR is falling when the fundamentals look stronger than ever, or if you're trying to figure out whether this dip is a trap or a setup before a major breakout, this video is going to give you the full picture. Hey guys, you're watching Crypto Blogspot. I don't take any sponsorship money for these videos, so what you hear is my own opinion and not something paid for by a project. So if you appreciate transparency, please like the video and subscribe to support the channel. And of course, nothing in this video is a financial advice. Now, let's get straight into the Hedera update, because what's happening behind the scenes right now is far more important than what we are seeing in the short-term price action. Hedera is entering a really interesting phase where massive institutional accumulation is happening at the same time that the price continues to drop. And while a lot of the people are confused about that, when you really zoom out, it actually makes perfect sense. First, the big headline: Canary Capital has increased its HBAR holdings to over 409 million HBAR, up from roughly 390 million just a day earlier. That is a single day jump of 19.2 million HBAR, and that brings them to around 0.81% of the entire token supply. That is not noise. That is the kind of accumulation that only happens when someone is positioning for a major long-term play. Remember, they don't care if HBAR is at 16 cents or 14 cents or 12 cents. Institutions don't buy short-term candles. They accumulate long-term supply. And what makes this even more interesting is that Canary is only one ETF. There are multiple HBAR ETF applications in the pipeline. If even 2 or 3 of them go live in the coming months, we could see a real supply absorption event. Here's where it gets weird. Despite more than $68 million inflow into the ETF, HBAR still dropped around 7% and the overall price action remains bearish. But rather than being a contradiction, that's actually a classic accumulation signal. Accumulation does not happen during hype. It happens during fear and boredom. And while retail traders panic or give up, long-term holders and institutional entities quietly take supply off the market. Now, before we talk about the price structure, we have to talk about the markets, because this isn't happening in isolation. Bitcoin crashed down to around $90,000 just a day ago, and the entire crypto market took a hit. Money flowed out of the altcoins, liquidity thinned, sentiment dropped. And when Bitcoin makes a move like that, it drags sentiment, leverage, and liquidity with it. And that's exactly what we saw across mid-caps, including HBAR. The important thing is that despite that drop, ETF inflows continued, and that tells you everything. If the ETF was just speculation, inflows would stop the moment price started falling, but they increased. Someone is happily buying the dip, collecting supply from the impatient traders, and clearly planning something long-term. Now let's talk technical structure. HBAR has been stuck inside a descending channel since late 2024. Right now, it's testing the lower boundary of that channel. Eventually, these descending channel structure break, and when they break, they usually break violently. Think of it like a spring. The longer it compresses, the harder it snaps when it releases. The breakout zone to watch is around 20 to 22 cents. If HBAR can break that range with strong volume, that's where everything opens up. Shorts unwind, retail returns, momentum traders jump in. It becomes a supply squeeze setup. Now here's where the fundamentals connect. Wrapped Bitcoin officially launched on Hedera. That brings Bitcoin liquidity into the network and allows Hedera to support Bitcoin-backed DeFi without relying on stablecoins. That means lending, borrowing, tokenized assets, swaps, tools, all powered by Bitcoin value but running inside the Hedera ecosystem. If enough Bitcoin liquidity enters Hedera, you're looking at a network that can build real DeFi rails, not just speculative staking farms. Combine that with the ETFs absorbing supply, and suddenly you have a demand engine and a reduced free float supply. That's one of the strongest setups a token can have long term. Now let's address the bearish side. Yes, derivatives funding flipped negative. Yes, the open interest dropped. That means futures traders are positioning short and closing long leverage. But that is not a bad thing. In fact, it reduces the risk of cascade liquidations and makes any upside breakout cleaner. The support level that matters right now is 16 cents. If it breaks hard and closes below, the next zone is around 12.4 cents, which lines up with the April lows. If the ETF continues absorbing HBAR while price drifts down, you end up with an even stronger accumulation scenario because the ETFs are buying at lower prices instead of higher. That is why I keep repeating that price is not the important part of this story. Flow matters more than price. If supply keeps leaving exchanges and entering ETF custody wallets, retail will eventually be forced to buy at higher and higher prices when sentiment shifts. We have seen this with Bitcoin repeatedly. The move happens after the accumulation is complete, not while it is happening. You can already see long-term patterns forming. Retail volume is down, social interest is low, shorts are confident. Every bearish condition is in place, and yet the ETF keeps buying. That is not an accident. Every single major crypto rally in the last 10 years has started during boredom, fear, and disbelief, and sideways movement. That's where professionals accumulate and retail exits. By the time FOMO arrives, the move is already halfway done. The final factor here is narrative rotation. Ethereum, Solana, and the Bitcoin L2 sector are seeing massive hype. Hedera, meanwhile, is being quietly ignored by retail but quietly accumulated by institutions. That is exactly what happened to Solana at $8 in 2020 and Polygon in 2021. Nobody cared until suddenly they did. So here's what I think realistically. Short term, HBAR might stay flat, even drop more, especially if Bitcoin keeps struggling under $100,000. But long term, if ETF inflows continue, if wrapped Bitcoin liquidity grows, and if Hedera breaks out of the descending structure with volume, I think we will see a multi-phase move. First, a technical breakout, then a narrative wave as people realize institutions already bought their bags while price was boring. Then a supply squeeze as ETFs and long-term holders and DeFi lockups eat into circulating supply. That type of move doesn't happen every month. It happens every cycle. This is not guaranteed, of course, nothing is guaranteed, but the setups that lead to big moves look exactly like this. Low excitement, high accumulation, ignored fundamentals, and institutional behavior that makes no sense to retail traders yet. So if you're watching this and you are feeling discouraged by the price, zoom out, look at where the supply is flowing. That tells a more honest story than a red candle ever will. That's it for today's breakdown. If you find this helpful, please support the channel by liking this video and subscribing. So thank you for watching, and I'll see you in the next video. So stay tuned.